So this video is on Boeing, and their stock is falling due to China delivery halts and cash flow concerns. Now, before we look at the charts to see where price is heading next, I do want to look at this article, and it is coming from Investing Place. So Boeing disclosed that it has not made recent aircraft deliveries to China due to a request from the country's aviation regulator for additional certification documents. The documents pertain to the batteries in cockpit voice recorders, which are installed on all Boeing models, including 787 and 737 MAX. The aerospace giant acknowledged the impact of this halt on its financials, with the company's CFO indicating an expected hit to second quarter cash flow. Now, the CFO spoke at the WOOF conference and said that the second quarter's cash flow might be worse than the first quarter's. This is attributed to the ongoing lack of aircraft deliveries to China, a significant market for Boeing's commercial airplanes. The company also faces challenges beyond China delivery issues. Supply chain constraints for the 787 model persist, which could further complicate Boeing's ability to increase production and deliveries. As a result of these combined factors, Boeing has projected that deliveries in the second quarter will not see a significant increase and will likely be close to the numbers seen in the first quarter. All right, kind of with all that said, you can see price is hovering around this support resistance support band at about $175. So this level is critical. You can see how we had a false breakout to the downside before buyers stepped in to push price a little higher. However, price still remains in a leg down situation, meaning price could continue to fall lower. Now, if we move this dash line to the most recent pivot low, the 160 level is going to be very critical, because if you look to the left and down, this extended range green candle, it signifies that there are no buyers until you get to roughly 140. So if we see closes below 160, at a minimum we're heading to 140. But the real buyers are going to be down at the 120 level. That's where we had this double bottom. Now, how does this look in comparison to the bigger picture? This is kind of where we're at. Well off the highs established in February of 2019. And not only do we have a most recent double bottom, but these are pandemic lows. And so there's significant buyers down here, which is only $50 lower. Let's take it to the daily chart. So short-term momentum is to the downside. As you can see, price broke a short-term uptrend line. And even at this pivot low, you can see volume was relatively low. So this is a weak pivot low. This is the extended range green candle that we saw on the weekly chart. And although do you have smaller levels of interest, they're not significant. Going down to the hourly chart, as you can see, the momentum was to the upside until price breached and closed below this short-term uptrend line. You do have a small pocket of buyers at this 1 hour daily buy level. But again, momentum is still to the downside. So I anticipate this at some point getting breached. And this was that drop base rally we saw, which established the pivot low. Again, another level of interest on the hourly level, but again, these are hourly zones. And so what's going to get critical, what's going to be critical, prices are going to move higher. Not only must this band hold, we need to see closes above 188. Thanks for watching. Subscribe. Please like the video.